Yo my people, welcome back to another episode of Project 30, a 30-day module where I'm teaching you guys completely free of charge how to trade. Now, if you guys haven't seen the other episodes, make sure you go and watch them, because if you haven't watched them, you're not going to understand what I'm saying or what I'm teaching you guys in this episode. Also, you guys make sure you like, comment and subscribe. It just helps boost this video out on the algorithm to other traders out there that might need help. For those of you guys that have never seen me before, my name is OneFX. I'm a content creator and I'm a day trader as well. Make sure you guys check out my other social medias, link in the description. So without further ado, you guys should know the drill by now. Let's get right into this video. So as the title of this video, put time-based liquidity. This is the title. This is what I'm going to be teaching you guys about today. I want you guys to make a note of this. Time-based liquidity is a lot stronger and a lot more of a draw to price compared to normal liquidity. Let me explain. So liquidity placed in the market is during specific times of the day or the week or the month. It's a lot stronger and price is it has a lot more reason to go there in comparison to your average swing high and swing low. So to visualize these concepts, I need to teach you guys something about sessions. Now sessions are just very specific times during the day when the banks and the big institutions are trading these markets. You guys want to be trading during a kill zone, during a session. A kill zone is just a specific time frame window within the session. But nevertheless, like I said, you guys want to be trading these sessions. Why? Because the market is a lot more volatile when the banks and big institutions are placing down their orders. That way you guys will get the most cleanest and most volatile price action. And before I get into that, I want to give you guys the time zones of the actual session. Now, as you guys can see on the screen, there are three main sessions. This is your Asia session, your London session, and your New York session. For EURUSD, ideally you want to be trading London and New York. You don't want to be trading Asia, and I'm gonna get to that in a second. And me personally, I never trade Forex after this 4 p.m. time frame window. Why I've given you guys the lunch hour and the PM session is because for pairs like Nasdaq, the S&P 500, this is very good. You guys can trade during these times. The lunch hour, however, you do not want to be trading, whether it's Forex, Nasdaq, whatever it may be. Never trade the lunch hour, because of course it's the lunch hour of all the big banks, institutions, they're all on their breaks. You're not going to get clean, efficient price action. The PM session, however, you can trade on indices and futures such as Nasdaq, S&P 500, gold, etc. Now, I told you guys in the first episode, do not have many mentors, do not have different mentors. Why? Because I'm going to teach you guys something and your other mentor that you might have is going to teach you guys another thing. This will cause conflict in your brain. That's what I told you guys. Now, these time frames here, I am telling you guys from my market experience, from my personal back testing, forward testing, etc. These are the best times you guys want to be trading. These are the best session highs and session lows that you guys want to mark out. Now, I've got an indicator for that. I'll link it in the description, but all it does is it marks out the sessions, highs and lows, and it marks out when the session is. Now, like I said, ideally with EURUSD and GBPUSD, you want to be trading the London and New York. This is simply because this is when you'll get the most cleanest, volatile, efficient price action. Now, I told you guys to never trade the Asia session for EURUSD or GBPUSD. There are some pairs, however, which you guys can research into that move very clean during the Asia session. However, for us UK people, that's during midnight. I'm not trying to stay awake and pull off an all-nighter for a candle. Also, I forgot to mention that these are all UK time windows, so you guys want to go over here and make sure that you're on the London session. If you do change it to yours, then of course adapt to these times. But ideally, this is when you want to be trading the markets. Now, for EURUSD and GBPUSD, the reason why Asia is so dead is because it's during Asia, right? These are major pairs. Anything that has XXX USD in it is a major pair. Anything that's like, I don't know, NZD, AUD, these are minor pairs. Now, of course, because it's Euro USD, it will be most active during the London session when all the European, London, I guess, banks are open, and it will be active during the New York session. Why? Because that's when the USD, the American banks, they're open, right? However, a London bank is not going to be trading during Asia. Does that make sense? Now, another reason why I told you guys not to trade Asia, not only because it is low volatile, as you guys can see, price is very inefficient, very choppy. You'll just get caught up in here. Another reason why I told you guys not to trade it is because there's something called spreads. Now, during Asia, there is very bad spreads. What is spreads, you ask? You're going to get some. Calm down. So as you guys can see at the top of the screen, there's a difference between the buy and sell number. Very small difference. This is the spread. What spread actually is it's the difference between the ask and the bid price. The bid price is when someone wants to buy, and the ask price is when someone wants to sell. You don't really have to know too much about that, but all you guys have to know is the higher the spreads, the worse the spread is. The lower the spreads, the better spread you're going to get, and you want to be trading with ideally an account that has low spreads. So let me show you guys what spreads might actually, how it can affect your trading. For example, if you guys wanted to be buying, and let's just say you had a random stop loss there and you were targeting wherever, your entry is on this white line. Now, what spreads might do is when it comes down to your entry, you might not get tagged into your trade. This is bad spreads, because literally what it will look like on the real life charts is this will be the bid price and this will be the ask price. So because there's a gap here, if you come back here, this gap has to get filled. Does that make sense? Alright, cool. I'm just editing over this video and I realized that was the worst possible explanation a man could ever give. But I'm gonna try to explain it again. Think of it like this. Your entry is worth £10, right? Where there's a buyer, there has to be a seller. You want to buy. The seller is asking for more than what you want to buy it for, so the order will not go through. Whereas if the seller was willing to sell to you for $10 and you were willing to buy for $10 and there was zero spreads, of course your order will get filled instantly. Now, like I said, during Asia, there are very bad spreads. For EURUSD at least. I don't know about other pairs. However, during normal times you will get decent spreads which you can actually trade with. Now going back to the start of the video, I told you guys that time-based liquidity is a lot more stronger than normal liquidity. Let me show you guys what I mean. So cool, like you guys can see here, this random swing high that was placed at, I don't know, 4 or 5 o'clock, this was placed during outside of a time frame where normal people will be trading. So because of that, think of it as there's kind of less liquidity there. Whereas if we were to mark out a session high, there are so many people trading during that session, so automatically there will be so much more liquidity resting on the line. Same with the session lows, there will be more liquidity resting on the line because think of it like this, there's more people trading there during that specific time, so of course there's going to be more stop losses on the line. So that's the first example of session highs and session lows are a lot stronger of a draw in terms of price. Price wants to take session highs and session lows compared to your average swing low, which is just placed in at like a random time during the day. And you guys can notice a pattern that these session highs are always being targeted, these session lows, they're always being targeted. Now another thing I want to go into is these daily highs and daily lows. These are very strong points of liquidity as well. Price is always looking to take out these daily highs and daily lows. As you guys can see, this is a daily low, this gets taken, this is another daily low, and this gets pinched. When you see these daily highs and daily lows getting taken, you can expect a reversal. Not all the time though, however, you can still somewhat expect a reversal. Why is that? Because I told you guys from the start, liquidity is fuel for the markets. So think of it like this, if we've taken so much fuel, we've taken these previous daily lows where there's a lot of liquidity on the line, and I told you guys that after liquidity sweep, price likes to reverse. And as you guys can see here, once we've taken out these previous daily lows, you guys can see price reverses. Like I said, don't marry that idea. However, you guys want to keep it in the back of your mind that, yo, if a previous daily high and daily low gets swept, is there potential for a reversal? In cases like this where we take out all of this liquidity, this is a previous daily high, this is a previous daily high, and this is another previous daily high, then of course you can expect a big reversal because we've taken so much liquidity in the market. Another thing as well, previous weekly highs and previous weekly lows, these are very strong points of liquidity as well. As you guys can see, when the previous weekly high gets taken, price likes to reverse. Don't marry that idea because you guys can see when this previous weekly low gets taken, price doesn't reverse. Why? That simply means that price is bearish and we want to go lower and maybe target all of this liquidity down here. But again, you guys can see it plays out more times than not. We take out a previous weekly high, we take out another previous weekly high, and notice what else we do. We mitigate this fair value gap. This is a PDRA, this is a point of interest where we can expect a reversal. And as I told you guys, when we have a form of accumulation, manipulation into a PDRA and then we get a market shot to shift, you can expect price to reverse. Why? Because we've taken liquidity, we've manipulated price, we've invited sellers into the market that have seen this as a breaker structure. However, we've just mitigated a point of interest where we can expect a reversal. This is a form of AMD as well. It might not be the cleanest accumulation, however, accumulation is just liquidity. And you guys can kind of see it playing out here. We have this form of accumulation here, we get this manipulation, and then price distributes away. I'm hoping that all makes sense for you guys. Like I said, you guys want to be trading during these sessions. Whatever pair you're trading, make sure that it's in line with a session. For example, you don't want to be trading, I don't know, GBP, JPY during the New York session. It's simply not going to be as clean and it's not going to move as volatile compared to if you're trading during the London or the Asia session. So like I said, whatever pairs you guys go on to trade, make sure that you're trading during a very specific session. You got a much higher chance of hitting TP quicker, you got a much higher chance of hitting TP in general, you're going to get better spreads, and overall you've positioned yourself for success. Whereas if you were to take a buy during some fugazi time, I don't know, after New York or London. Now, the next thing I want to go into is something called news. Also, free Discord link in the description. Make sure you guys join that. It's a public server and it's full of traders where you guys can network. Also, there's so many different sections for like self-improvement, car section. We've got a gym section. I don't know what the hell that is. But if you guys have any questions, whether you're trying to improve in life, whatever it may be, you guys can join this and you guys can check it out. Also, if you guys are interested in joining Project 30, this is where I got my strategy and I send out markups. And if you guys are trying to take your trading to the next level, make sure you guys check out the link in the description. But back to the point, news. Now, you guys want to go on forexfactory.com. Literally just copy and paste this link, save it somewhere, favorite it, wherever it may be. I'd say even bookmark it, but make sure you have access to this and you can check it every single day without any stress, or so that you don't forget essentially. And the first thing you guys want to do, whatever pair you're trading, go on this filter section and turn off any pairs that you're not trading that's not correlated to your pair. So for example, because I trade EURUSD, GBPUSD, I'm not interested in what the Australian dollar is going to do or the Japanese yen, so untick them boxes. Keep all of these boxes here ticked. Now think of news as simply just when the government release data on how the economy is doing. Now when you guys see a yellow folder, it's not too deep, you guys shouldn't care, you can still trade for it. When you guys see an orange folder, you want to be a bit careful because price can be very volatile. When you guys see a red folder, you guys ideally don't want to be trading like 15 minutes before or after it, and that is simply because for like a red folder news event, price can do something like this. As you guys can see, this was when news dropped. Price can move very quickly in one specific direction. Now here's the worst part about trading news. For example, if you guys were to be taking a buy here and you got completely, like, you're on the wrong side of the market, what will happen is the market will slip you. So what does that mean? Because price moves so quickly in one direction, like this candle here, I know we're on the 30-minute time frame, but best believe that this candle formed within 3 milliseconds of when this candle opened. But nevertheless, because this news event dropped, and on the second it dropped, like price just flew down. I shouldn't say flew, I should say it dumped, but you guys get the point. Think of your stop loss as kind of a sensor. Price senses when it's there. So because price moves so quickly, your stop loss doesn't censor it till like 5 milliseconds after. And what happens is you end up getting taken out of your trade somewhere down here. This is slippage and there's nothing you can do about it. So that's why I tell you guys to be careful if you do go ahead and trade news. Me personally, I do sometimes trade it. I don't really look to avoid it. If the setup is there, then I'll take it. And I've hit TP trading news before. However, I'm also telling you guys this because I've hit stop loss as well and it's not nice. So yeah, make sure you guys don't get slipped to Jahannam. So now back with news. Make sure you take a note of this. But anyway, the major news events you guys want to look out for is CPI, TPI, unemployment claims, FOMC, and NFP. There's also one called PMI. I'll be honest, basically every single one of the red folder news is out there. But as you guys can see, this CPI red folder, it will do damage. These core retail sales, I've seen them move. They do move. However, they're not as detrimental as FOMC or NFP. You guys can see unemployment claims. You guys want to be careful when these news events are dropping. Now, before I go into today, I'll just quickly check this. I'll see, cool. Let's just say I'm trading Tuesday and I'll look to see, cool, is there any news events that are in the session? Is there any news events I should look out for? Is there any news events I might want to sit out for, etc. Now make another note of this. The first Friday of every single month, this is when NFP drops. It only drops on the first Friday of the new month. So for example, if we were to go into January and then we were coming into Friday, there will be NFP. The next week there won't be NFP. The next week there won't be NFP until it's February, the first Friday. Now NFP tends to be the one that does the most damage. However, they can all move very quickly. Also another thing with trading news, because price is so volatile, let's just say you guys were to be in a buy, you guys want to be very careful because what can happen is price can, like, I don't know, it can go flying into profits. You get so greedy that you don't close and the price just reverses. What can also happen is price will just wick both ways. Now an example of this would be this. You guys can see, let's just say you were to be in a buy. You had your stop loss on the swing low and you were targeting, I don't know, Asia highs. What can happen is you'll get stopped out and price will go fly into your TP. So you guys be careful when trading news. However, why I don't completely say like other traders out there don't trade news is because if you have a strategic approach to trading news, you can hold a trade through news. But anyway, that's been it for this video. I hope you guys have enjoyed. I hope you guys have learned something new. Like I said, if you guys are trying to take your trading seriously and to the next level, be sure to check out the link in the description. But anyway, it's been your boy 1FX. Take care, my people.